The governor of Florida starts panicking as he watches his favorite county go down. Palm Beach County, the crown jewel of Florida's luxury market, was hemorrhaging. 1,546 properties in pre-foreclosure. 32,000 involuntary liens, and Jupiter prices fell 27% in a single year. He'd celebrated the region as proof that wealth insulated Florida from risk. But when the foreclosure wave hit and luxury buyers vanished, his composure shattered. What triggered the governor's panic? The answer reveals a market beyond saving, and what comes next will determine whether Palm Beach becomes a recovery story or the epicenter of Florida's housing collapse. Palm Beach County was supposed to be different. While the rest of Florida scrambled, this was where the wealthy parked capital. Between 2021 and 2024, the region attracted billions in out-of-state money. New York, California, and Chicago, buyers fleeing high taxes landed in gated communities and waterfront estates. The influx felt endless. In Palm Beach proper, the median home hit $3.2 million by June 2025, up 25.7% year over year. But that headline masked a darker reality. Across the broader county, cracks were spreading. West Palm Beach saw prices flatline at $425,000, unchanged from last year. Jupiter collapsed by 27%. Palm Beach Gardens fell 7%. The luxury top was soaring while the foundation crumbled. Closed sales told the real story. In August 2025, Palm Beach County recorded 820 closed sales, down 4.4% year over year. Year-to-date sales reached 6,631, down 8.8% from 2024. Properties that once moved in weeks now sat for 94 days on average, up from 79 days a year earlier. Buyers were disappearing, and sellers were left holding inventory nobody wanted. Inventory exploded. Palm Beach County had over 13,900 homes for sale by mid-2025, with some reports showing listings topping 16,000. The flood wasn't limited to starter homes. Luxury condos in Boca Raton and Delray Beach sat unsold for months. In West Palm Beach, monthly sales dropped 18%, with homes lingering 102 days before finding buyers, up from 72 days last summer. The bifurcation was stark. Ultra-luxury properties in Palm Beach and Ocean Ridge still commanded million-dollar premiums. But everything below that tier was in freefall. Median prices for the broader county sat at $475,000 in August, down 1.8% year over year. For condos, the collapse was sharper. Townhouses and condos entered a full buyer's market, with inventory overwhelming demand. Governor DeSantis touted Palm Beach County as proof that Florida worked. He pointed to luxury sales and tax revenue. But beneath the headlines, working families were being priced out. Teachers, firefighters, healthcare workers, all gone. The people who built communities were replaced by capital that now showed signs of retreat. The collapse wasn't just about price. 1,546 properties sit in pre-foreclosure across Palm Beach County. 32,000 involuntary liens filed on 23,352 properties. These aren't statistics. They're families who bought at the peak, gambled on appreciation, and lost. For every mansion selling for millions in Palm Beach, dozens of middle-class homes face foreclosure in surrounding cities. In Jupiter, the market cratered. Prices down 27% in a year, wiping out equity for thousands. Owners who purchased in 2022 and 2023 now owe more than their homes are worth. Listings multiply, but buyers stay away, convinced prices will fall further. Palm Beach Gardens followed with a 7% drop. Even Boca Raton, long considered stable, saw pressure mount as inventory climbed. The foreclosure wave is just beginning. 96 foreclosure properties are actively listed countywide, with a median price of $495,000. But that number understates the scale. The 1,546 pre-foreclosures represent homes where owners have missed payments but haven't yet faced auction. By spring 2026, analysts predict that the number could double as adjustable rate mortgages reset and owners exhaust savings. Real estate agents describe a market in paralysis. Showings drop week after week. Buyers who toured properties in the summer now ghost listings entirely. One Boca Raton broker says, "We've gone from bidding wars to silence. Clients don't want to catch a falling knife." The distress isn't limited to individual homes. Condo associations across the county face mounting crises. Following Surfside, Florida mandated structural integrity reserve studies for buildings 30 years or older. The deadline looms, December 31st, 2025. Associations scramble to comply, but the costs are staggering. Owners receive notices demanding $5,000 on $80,000 or even $100,000 per unit to fund reserves. Monthly HOA fees spike 15% to 20% countywide. For retirees on fixed incomes, the shock is unbearable. A 68-year-old in Delray Beach describes opening the assessment letter, "They want $62,000 in 90 days. I don't have it. I'll lose everything." The reserve mandate, designed to prevent another Surfside, has triggered a wave of distressed sales. Owners list condos just to escape assessments, but buyers won't touch older buildings. Financing is nearly impossible. Only 16 to 21 buildings across Palm Beach County qualify for FHA-backed loans. Out of thousands of eligible properties, the approval rate is abysmal. The result? Inventory floods the market while demand evaporates. Condo prices in older buildings collapse. Properties that sold for $400,000 in 2023 now list at $280,000 with no offers. Sellers slash prices monthly, desperate to exit before the next assessment arrives. The human toll is everywhere. Board presidents field death threats. Owners sue associations, alleging self-dealing and mismanagement. In West Palm Beach, a lawsuit accuses a board of awarding no-bid contracts to family members. In Boca, owners claim reserve funds were redirected without consent. The litigation freezes repairs, delays insurance renewals, and scares off buyers. The promise of condo living has fractured into suspicion and financial ruin. Insurance delivered the final blow. By mid-2025, average annual premiums in Palm Beach County exceeded $6,000, more than double the national average. For homes near water or in flood zones, quotes top $10,000 or more. 6 carriers failed statewide between 2022 and 2025, leaving homeowners scrambling. Citizens Property Insurance, the state-backed insurer, absorbed the risk. By 2025, Citizens covered over 1.3 million policies statewide, with Palm Beach County contributing thousands. Under Florida law, if Citizens can't cover hurricane losses, it can levy assessments on every property owner in the state. A $10 billion shortfall would trigger a 10% surcharge across the board, lasting years. For buyers, insurance became the deal killer. A family budgeting $4,000 for annual coverage receives a quote for $9,000. Lenders demand proof of paid premiums before funding. If coverage can't be secured, the sale dies. In West Palm Beach and Delray, agents report weekly deal failures tied to insurance. Sellers offer to cover a year's premium at closing. It's not enough. Flood risk adds another layer. 93% of properties in Palm Beach proper face severe flooding risk over the next 30 years. Countywide, 21% of all properties are at extreme risk. Insurers price this into every policy, pushing premiums higher. The insurance death spiral has arrived, and there's no escape. Mortgage rates near 6.7% to 7% crushed remaining demand. A $500,000 loan at 6.8% means $3,250 monthly before taxes and insurance. Add $600 in insurance and $400 in property taxes, and the payment tops $4,200. 2 years ago, at 3%, that was $2,800. The $400 difference locked out thousands. With a median household income in Palm Beach County of around $75,000, most families can't afford homes above $350,000. But with median prices at $475,000, the gap is insurmountable. Lenders tightened standards. Down payments rose. Credit thresholds climbed. Deals collapse when buyers can't qualify. Homes sit unsold for months. In West Palm Beach, the average listing ages 102 days, up from 72 last year. In Jupiter and Palm Beach Gardens, some properties linger 6 months with no offers. The velocity that once defined Palm Beach County has vanished. For buyers who can afford to purchase, the question is, why rush? Prices are falling. Inventory is climbing. The rational move is to wait. Governor DeSantis faced the press in West Palm Beach, jaw clenched. Reporters hammered him. 1,546 pre-foreclosures. Jupiter down 27%, sales down 8.8%. His response was evasive. He blamed federal policies, insisted reforms were working, but offered no evidence. When pressed on Jupiter's collapse, he called it market rebalancing and accused critics of fear-mongering. He proposed emergency subsidies and foreclosure moratoriums. Within hours, lawmakers rejected everything. The dysfunction played out on live TV. Behind closed doors, advisors scrambled, but every plan hit the same wall. The cameras captured it all. The trembling voice, the defensive posture, the desperation as his narrative collapsed in real time. Families who bet on Palm Beach County are paying the price. Linda Carter bought a condo in Boca Raton for $380,000 into 2022. She received a $75,000 special assessment notice in January 2025. Her HOA fees jumped from $550 to $820. She can't afford either. We thought Boca was safe. Now we're trapped. Local businesses are collapsing. Atlantic Avenue in Delray Beach, Worth Avenue in Palm Beach, once thriving districts have gone quiet. Foot traffic dropped 25%. Restaurants cut hours. Boutiques close. The seasonal buyers who filled streets and shops are staying away, spooked by foreclosure headlines and insurance nightmares. Real estate agents who thrived now struggle. Commissions dried up. Listings sit for months. One Jupiter broker describes the shift. We went from multiple offers to nothing. Clients are desperate. Some walk away from deposits rather than close. For those still here, uncertainty rules. Homeowners debate selling at a loss or holding through the storm. Business owners wonder if they'll survive another quarter. The promise of Palm Beach County, stability, wealth, and security, has been replaced by fear and regret. Industry groups cling to market correction, but sales down 8.8%, foreclosures rising, Jupiter down 27%. This isn't a correction, it's collapsing. Some point to Palm Beach proper's luxury sales as a strength, but for most residents, that's irrelevant. The crisis hits hardest where working families live. The gap between industry spin and reality grows wider daily. Behind closed doors, agents admit the truth. The market is beyond rescue. Buyers won't return until prices stabilize, but prices won't stabilize until foreclosures flush through the system. The cycle feeds itself, and there's no floor in sight. The future hinges on forces beyond control. Insurance must stabilize, rates must fall, foreclosures must be cleared, confidence must be rebuilt. Some analysts see potential if reforms take hold. Others warn that the market has fundamentally changed. If buyers price in flood risk, insurance volatility, and foreclosure waves, easy appreciation is over. Palm Beach County may settle far below recent peaks, leaving thousands underwater. The foreclosure wave predicted for spring 2026 could accelerate the spiral. The psychological toll would confirm for buyers that even Palm Beach County isn't immune. The luxury market at the top may hold, but everything below faces years of pain. In 2025, Palm Beach County's market stands in crisis. 1,546 properties in pre-foreclosure. 32,000 involuntary liens. Sales down 8.8% year to date. Jupiter prices are down 27%. Insurance averaging $6,000+ annually. Citizens property insurance is on the brink. Mortgage rates near 7% locking out buyers. Governor DeSantis, who championed the region as proof his model worked, now faces panic as the collapse exposes systemic fragility. The evidence is clear. Palm Beach County is beyond rescue, and the governor's confidence has turned to desperation. Drop a comment if you think your Florida city is next, and hit subscribe for more real estate market breakdowns.